Hey everybody, Steve here with Mortgage Right. I wanted to answer a question that I get with every phone call that I have. I think it's every phone call, and I'm not exaggerating at all. But the question is, what is going to happen to rates? And while that is really hard to predict, it's kind of like predicting what a certain stock is going to do. Is it going to go up or down? There are indicators that tell us, kind of the general direction of where it's going to go. But there's about 8 or 10 people in this article who they have quoted, and most of those people believe that rates are going to drop a little bit in the next 12 months. Nothing significant, nothing really to write home about. Rates today have come down a little bit over the past couple of weeks, so they're a little better than they were a couple of weeks ago, but they're still worse than they were in January. So the prediction going forward is slightly lower rates. And what does that mean for buyers with these predictions in terms of payments? Well, let me tell you, based on a $450,000 loan amount, principal and interest payments only that we're talking about here, and I'm going to give you a few payments. So 7% today is kind of a normal rate, believe it or not, 7%. A $450,000 payments at 7% is going to give you a principal and interest at $2,993. If that drops a half a point, you go to $2,844 for principal and interest. If it drops another half a point, it is $2,697. And then let's say it drops another half a point. Now we're down to 5.5%. And 5.5%, I think, was the best prediction of anybody that made a prediction about rates. 5.5% is going to give you a payment of $2,555. So the difference between the best prediction and current rates today is a difference in payment pretty significant of $438. So what does that mean for you as a consumer? Should you wait? Or should you just go ahead and buy right now and maybe refinance? Well, here are the pros and cons, I think, as I see it. Waiting, if you wait for 5.5%, like most people are, the market is going to be even worse than it is today in terms of buying a house. So in a previous video, I talked about how prices have declined. Well, if you get a percent or a 0.5% lower interest rate, but you're paying $50,000 more for the property, is that a benefit to you? It just really depends. It probably isn't. Or if you're spending $100,000 more for the property, does a lower rate actually save you anything? And in the long run, no, I don't think it does. The best case scenario is if, let's say, you bought a house today, rates are horrible, you get 7.25, and then rates do drop in 6 months or a year, you can refinance and take advantage of that low payment and take advantage of a house that isn't absolutely insanely priced, like it might happen if rates do go down, like some of these people are predicting. Anyway, that's my 2 cents worth. That is a forecast on rates. Take a look at the article. I'd love to hear your comments below, or send me an email, a phone call. I'd love to chat with you about mortgage rates and all that fun stuff. Thanks for watching.